Hi there and welcome to this edition of Startup Central. I'm Nayantara. This is the only show of its kind on Indian television dedicated, of course, to startups, innovation, technology, disruption, basically anything to do with the new economy. It's going to be here on your favorite channel, ET Now, every weekday at 6 p.m. Like all the stakeholders of the community that we get on the show, the team that puts the show together, the Startup Central team, thrives on constructive criticism. So if you don't tell us how to improve this show to the next level, who will? So keep writing in. Our email address right on top, suc@etnow.tv. India is the third largest home for the startup ecosystem. In fact, India now has 100 unicorns. That's right, and these 100 unicorns among themselves have raised $63 billion, provided 3.35 lakh direct jobs. And these are numbers that have in fact also been shared by the Finance Minister Nirmala Sitharaman. The 100th unicorn was minted just very recently, and it is the Neobanking startup Open. So meet the 100th unicorn from India today. Joining us is the co-founder Anish, who's live with us. Anish, I think congratulations are very much in order. You've seen some of the top ministers of this government share about how Open is the 100th unicorn to be minted. Your name has been all over social media as well. How does it feel?
Thanks, Nayantara. It's an exciting feeling. I think for the last 2 days, we don't know how to respond. The messages pouring in, the support from the media, the ecosystem, especially with the minister tweeting. I think it's like definitely a special feeling, and more importantly, great to see how the ecosystem is supporting each other.
So tell us a little more about this fundraise and how you've entered the Unicorn Club, because it's now more difficult to raise funds. If you look at it in the month of April, not even one unicorn was minted. We likely see interest rates go up, the era of easy money come down, but with IIFL and Tiger Global giving out big checks, must have been a hard pitch from your side.
So, Nayantara, we raised our Series C round, the previous round 5 months back. So we had always a runway for the next 4 or 5 years. So we were not in the market for fundraising, but we've been getting a lot of inbound interest, especially soon after we released we announced our Series C announcement. So more than capital, what we're looking for strategic partners who can add value to the platform and the company. And that's where, when the discussions with IIFL materialized, we realized that there is a lot of strategic opportunities, especially being IIF being one of the larger players in the lending space, on how they can add a lot of value to the SMEs on our platform. And then the existing investors, Indian investors, Tiger Global, Temasek and 3 and 4 pitched in. So it was not like a hard pitch, or we were in the market for raising this fund. It was more like a mutual match we found during these discussions.
Okay, so you were being chased for capital. So tell us, how long did the fundraise take to close after you decided to give in to being chased by some of these marquee names that are at your cap table now?
I think it took us 4 months. So we started the discussions in Jan, and it's April is what? So around 4 months it took.
Okay, I asked that because we used to hear about FOMO, due diligence finishing in record time, term sheets being signed in a matter of hours. But now tell us, Anish, after the Series D fundraise, after entering the Unicorn Club, being the 100th unicorn from India, what are the future plans?
So primarily right now we are looking at scaling up the platform. So today we have around 2.3 million users who are using small businesses on our platform. So we are looking at scaling that into 5 million. We are looking at enhancing the existing suite of products, launching new products on the lending space. Primarily, we have announced the launch of 3 new products on the lending side. And then we have 2 more product lines, which is focused on the enterprise segment, where we cater to banks as well as other fintech providers. So scaling up those products. And then the next is on ramping up our leadership hires, as well as increasing the team size from the current 500 to 1,000. And so these are the next priorities for us for the next 12 months.
Now, we're also talking at a time when there is a lot being discussed about not enough oversight for fintech products. We've seen what's happened in Australia, for example, the way buy now, pay later scheme has unraveled. Will we see rising NPAs when it comes to fintech companies simply because they haven't done due diligence? The mad rush to give Gen Zs and millennials money. How are you making sure that your systems and processes are in place?
So for the last 4 years, when we launched the platform, we were offering banking services, primarily a current account in partnership with banks, with a suite of tools to help these small businesses automate their finances, right from managing their receivables, their payables to their accounting, etc. And we're not launched lending as a product because we really wanted to solve for the current banking challenges they face. Now, lending is a natural on that, and the primary challenges today most of the NBFCs or banks faces is like the lack of access to alternative data, because they have to solely rely on the bureau scores as well as the bank statements. And when it comes to businesses, unlike consumers, each and every business is unique, so it's very difficult to underwrite. This is where we have a strong advantage because we have access to a lot of data of these customers, right from access to their receivables, the frequency in which they make their payments to their vendors, they receive their payments, access to their bookkeeping data. So combined with that, we are able to create have a lot more data to underwrite these SMEs in a much better way. So this is the way in which and in the last 1 year, we have experimented with a lot of lending products, and we have actually been able to manage this based on the data which we have access to.
Now, while your valuation has crossed $1 billion and you are talking about the kind of products you want to now launch after getting this fundraise, if we were just to see your numbers, you posted what? 5.6 crore rupees as operational revenues in FY21. That's the year ending March 31st, 2021. Your losses have increased 55% in the same financial year to come in at 65.5 crore rupees. At a time when a lot is being said about how we all need to look at unit economics, you all need to focus on P&L, need to focus on profitability. How have you gone in for this fundraise, and what do you have to say about your valuation not being close to what your P&L is?
Right. So when it comes to our specific space in which we operate, especially the neobanking space, our service was offered as a premium service for the last 4 years, basically when we offer the current account, the tools for businesses to manage their finances, etc. Now, for the last 4 years, the focus has been on the growth, because especially being a category creator in this space, because we are one of the first neobanks in the Southeast Asia, and especially the first one in the SME banking space. So creating that trust, getting the merchants and the SMEs to actually hook onto the platform, that was a primary focus. So we didn't, we were not actually activated the monetization rails till around 12 months back. It's only the last year that we have actually activated the monetization rails, and now we have actually we have actually started, the revenues actually started coming in from the subscriptions and the various revenue models available on the platform. And also, if you look at the losses, basically the 65 crores, which includes a cost of all our marketing expenses, the team which has actually grown from 0 to 500. We've been very cautious in terms of the spending. If you compare with the platforms of the similar scales, especially when on the B2B space, getting into 2.3 million SMEs basically. Now, in terms of what we have, the investors have seen is they have seen how we have actually grown in the last 12 months, both in terms of after we are starting the monetization rails, launching the new products, the adoption, the engagement. And now, since we are also the experiments that we are actually seeing with products like lending, etc. So this is one of the reasons why we are able to get to this valuation. And it comparably, when we look at some of our peer platforms globally and even in other markets, definitely this is this is also a comparable range basically.
Okay, so let's see how all of this pans out. Right now, the clarion call, of course, is to focus on the bottom line and better unit economics as well. Thanks a lot, Anish, for joining us live today on the channel, and Congratulations yet again.
Thanks, Nayantara.